Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 28th of July and we have our Friday guest today, Kelvin Wong, Senior Market Analyst at Oanda, coming to us out of Singapore. Kelvin, it's always great to have you on the show.
My pleasure, Brian, and good afternoon and happy Friday to you.
Now, Kelvin, before we get your insights, we're going to take a look at how markets across the region have been performing. We're going to look first, however, at cryptocurrencies. Bitcoin is at 29,258. It's down 0.75%. Ethereum is at 1,864. It's down 0.86%. Now, looking across the regional stock markets, we start where you're at. The Straits Times Index is up 0.72%. Bursa Malaysia is up marginally 0.07%. Shanghai is up 1.57%. That's a strong performance. The ASX All Ordinary, however, is down 1.12%. The Nikkei is down 1.7%. The Hang Seng is up 0.85%. Rounding up the numbers is the Kospi, which is up marginally 0.2%. Kelvin, your views on market performance in the first half of the day?
Yeah, definitely. If you look at the current situation over here, I would say that it's rather positive. Why? Because do not forget, last night in the US session, there was actually kind of I'll put it away, that test balloon on BOJ policy. Later, we'll discuss about that much later on. There was a popular Nikkei review news flow that's out during the mid-session in the US session yesterday. So that's around 1 a.m. Singapore time, indicating there's a possibility that BOJ monetary policy meeting today will actually do a tweak on the yield curve control upper limit. So at the moment it's 0.5%. So that news report actually indicating there's a high chance for it to actually put it up above to go up to like 0.75% or much higher. So that actually caused a bit of near jerk reaction in terms of the risk off scenario, where we start to see the US benchmark indexes so off. So in today's Asia session, the one that is directly hit will be the Nikkei 225, definitely, based on that negative news flow. But what's interesting over here is the other indices, benchmark indices, especially the China-related stock indices, which is the proxies, the Hang Seng Index, i.e. we're talking about the Hang Seng Index, Hang Seng Index, the Hang Seng Tech Index, and the HSCI. Both are up close to 1%. That is actually being supported by a relatively strong Chinese yuan against the US dollar that is contributing to this short-term positive animal spirits towards these China-related equities.
So, but the thing is, and just to recap for all of our audience, the BOJ left rates unchanged this morning.
Yes.
However, they have forward guidance that seems to be more hawkish.
Yes, precisely. So if you look at the situation right now is, yes, they left, number one, rates are unchanged for sure, but most market participants are looking at a tweak to the yield curve control program. So that is kind of the first basis or first leg of policy normalization that BOJ is about to take based on the previous guidance. So what you could see over here, no change in YCC, which is maintaining at 0.5% on the upper limit. But however, number one, during this YCC debate among the BOJ officials, in fact, today there's one dissented, surprisingly, to actually go against the rest of the BOJ officials in favor of raising the upper limit of the YCC. And also, towards the summary, I would say that the summary of the monetary policy statement that was issued at the end of this decision was, they did specifically mention this very sticking word that they will actually guide yield curve control more flexibility, and also operate yield curve control to be more flexible to respond nimbly to upside and downside risk. So it seems to me that it actually implies or is signal that BOJ is about to actually tweak this YCC policy as soon as possible, perhaps in the next monetary policy meeting.
Okay, so Kelvin, I want to take a step back a little bit and explain to the
Yes.
audience what the YCC is. And then now,
Sure.
based on the fact that we could be seeing we are at the tipping point of a change in policy, how should investors react?
Okay, sure. So let's go back to the first impact of what YCC is first. So YCC is basically is part of a BOJ ultra dovish monetary policy, is to keep Japanese interest rate close to 0% level. So basically, this YCC is a control on the benchmark 10-year Japanese government bond yield at 0%, but only allow it to actually navigate or oscillate between 0.5% on the upside and negative 0.5% on the downside. So whatever market forces that allow it to actually tip upwards due to potential rise in interest rate, or there could be more demand of Japanese assets. By right, in terms of economic forces, the JGB yield should actually inch up much higher because of this YCC control program. BOJ actually kind of control a monetary economic forces and preventing them for allowing the yield curve, the yield to actually go much higher beyond 0.5. So what you could see over here is that traditionally, right, if you're talking about this YCC that's being kept at 0.5 on the upside and negative 0.5 on the downside, virtually we're talking about close to 0% 10-year JGB yield. Number one, the Japanese currency will tend to be as a source of funding currency. That means people will tend to actually borrow in Japanese yen and look to actually invest overseas. So that actually put pressure on the Japanese yen on the weaker end. That means, i.e., for example, you're talking about dollar yen will actually tend to always appreciate once this persistent YCC program is being kept at 0%. So if you look at the situation right now, is that yes, even though number one, they managed to actually cap the YCC at zero at the same today, but however they tweak this lukewarm hawkish monetary policy guidance to make it saying that they're actually now in favor of a more flexible YCC, and together with one descendant of the BOJ member going against the rest today, you start to see this dollar yen actually weakening dramatically right now. So actually today they're actually down negative 0.6%. And what's interesting over here is that the earliest spike up in dollar yen is being kept by this 20-day moving average, I think as if it's at 141.30. So if this scenario starts to actually take shape, it means BOJ get more bold in actually giving more flexibility to the YCC. That means, i.e., going baby steps. I mean, starting to take baby steps. I would say the word starting to take baby steps to normalize their ultra dovish policy. It could actually further the dollar yen weaker. So that's more on the FX part. So let me elaborate how does it impact on the local Japanese stock market. So definitely in the past, right, if you look at past historical chart, usually the dollar yen, that means the dollar yen rate go hand in hand with the Nikkei 225. That means we start to see an appreciation in the dollar yen. That means dollar strengthening against the yen. The Nikkei 225 will strengthen as well. Okay, so definitely what we see over here is that yes, there's a negative near jerk reaction on the Nikkei 225. So the Nikkei 225 is actually one of the worst underperforming major benchmark in Asia session today. So let me have a quick look. In fact, they are not down negative 1.7%. Okay, a bit
Okay.
recovering from slight losses of negative 2.3%. But what's positive over here is that there's one particular sector within the Nikkei 225, which is the banking sector that's actually bucking the trend. So in fact, the banking ETF, the topics ETF, is the sole outperformer today with a very stunning rally of plus 3%. So what we could see over here right now is that fundamentally, in fact, a normalization of the YCC policy right now, or in fact, baby step to take towards what I call it a change in this ultra dovish monetary policy in Japan that has been along for more than 1 decade. I do not see it will start to actually lead to a very dramatic risk-off scenario in Japan,
Okay.
or even start to spill over to the rest of Asia.
Okay. On that note, Kelvin, thank you very much for your insights. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.